Hello everyone, welcome to Hawkeye Traders live presentation of the Hawkeye Training Room. My name is Randy Lindsay, host of today's interactive session. I'm here to educate and inform you on the proper use of Hawkeye on the TradingView environment. I'm going to spend the whole class today on TradingView. As I had said before, each week starting in March, I will be dedicating the entire class to a specific platform. Today, we'll be talking and discussing TradingView. Next week, we're going to be going over the NinjaTrader platform. The week after that, we'll be going over MetaTrader 4, and the week after that, we'll be going over TradeStation. So I've got 1 week dedicated to each of the supported platforms. I'll be more than glad to go over any questions or comments that you have regarding this. As usual, the application of Hawkeye on a particular platform might have some unique properties, but at the same time, it is still general in nature and can be directly applied to any of the platforms. So the things that you can learn today during today's class can be applied to any of the platforms. But there will be some nuances like how to format, how to apply charts, and things like that that might be different. So I welcome your questions, your comments, and your feedback. And at the end of the class, once I turn the video off, I might be able to load up and answer some specific other platform questions. But for now, this will be focused specifically on TradingView. I want to make sure that everyone here knows that we are here for educational purposes only. All right, that we are not registered trading advisors, so we cannot give you trading advice. All right, our training is not a solicitation to buy or sell any specific equity, option, stock, or currency. Past performance is not indicative of any future results, so please consult a financial advisor, a competent financial advisor, before you start investing your money in any of these instruments, and make sure you use common sense. All right, there is a large amount of profit that can be made from trading these markets. There's also a large potential for loss, even everything that you put in. So there's no guarantee that you'll make or lose money in any of these markets, but make sure that you don't trade with money that you cannot afford to lose, and make sure that you're willing to accept the risks that are posed in order to trade in these markets. Never trade with money you can't afford to lose. All right. Only use risk capital that's acceptable. All right. So any other questions or comments, let me know. I'll be more than glad to answer them and get them going forward. So right now, I've got the TradingView platform on a gold contract. As you can see, the gold, I've got the gold futures COMEX GC1 is the symbol that's listed here. I'm trading it on a 3-minute chart with a roadkill that's set to 6 minutes and another roadkill that's set to 12 minutes with the 6-minute heat map. So I'm looking at 3 time frame confirmations on a single chart. If I wanted to, I could look at all 4 of the charts. There is a ability to look at the 3 different time frames. Here's a 5, 15, and 30-minute setup on Microsoft, but I could do the same thing for gold if I wanted to see all 3 of my time frames. You can see by default the vertical and horizontal bars are linked, and so by default you can see that there is alignment. So you can look to see where Hawkeye aligns on all 3 time frames just by following the cursor. And in that way you have multiple time frame alignment right out of the bat. Also, if you are a cryptocurrency trader, you know that you can also pull up a whole selection of all of the alternate coins and other coins as well within TradingView. So you have full access to the whole suite of Hawkeye tools, be it the trend, volume, heat map, the Fat Boy, which I particularly like because I can look at the relative strength or weakness of all of the cryptocurrencies. So these are the 6 that I particularly like to follow, and I want to see how well they are relative to the other ones. When they are all trending very tightly and correlated, they tend to trend very nicely. And then when they are separated out and decorrelated, then they tend to be rather stagnant, just like the futures. So there are some commonalities that go between different ones. So um, let's go back to our gold contract that we're looking at. As you know, I like to look for and set up trades at about 6 o'clock in the morning. Usually come in and look at the pre-market trading that comes in, and I usually will find one or two really nice trades that come in. In this particular case, the gold contract was the only one that really gave me a nice tradable entry signal. All the other contracts were either sloppy or congested or didn't really give any really clear entry signals. And so from that, I was able to take this, and you can see based upon the setup here that I had about a 4 to 1 risk reward ratio based upon the setup and the level rules. Stop value was roughly halfway between the entry point and the Hawkeye stop, and the profit take was about 2.5 points. So you can see that's per contract, $250 per contract, which is a very nice start for the day right there. So regardless of the platform that you're looking on, application of Hawkeye rules is paramount. And let me go over those for you really quickly. Right here, as I was setting up this morning, I noticed the congestion that we were in. I also noticed two specific things. One, I had a nice volume bar extension right here. See that? Get rid of that thing. It's a little bit cloudy. And I'll put this one up here. You can see a little bit better. All right, see that price bar? That volume extended up into new highs in an uptrend with red volume. Okay, so that was my first sign that there was a change of direction, that the uptrend that was established was now going to start changing trend. And in that case, it was about 6 bars later, it did. But then there was a second one. Price tried to rally. It tried to open up high, but then there was a huge amount of volume that came in. So this was what I like to say, this was a stop rally. Okay. The market was trying to capture stops, and it was trying to trap retail traders at the relative high of the session to try to sucker them into the trade. So they wanted you to buy into this while their intent was to sell. And then right after this, you saw it sold pretty quickly. So the idea behind that was not good for retail traders, but Hawkeye showed this with bright, bold letters. That's why I like to identify these, because when that red bar came in, you can see it closed with a vengeance, and the volume on that thing was ultra high. So you got a nice red volume radar dot on that bar. The previous green volume was just a very low volume, leading you into a potential break, which was failed and suckered a lot of people into a potential breakout trade, which ended up being a catastrophe if you were looking to go long. Hawkeye already was down and red, so you wouldn't and could not have taken that on long trade anyway, because Hawkeye protected you. On the contrary, what it was a beautiful setup for a short move. It was already in an established down move. Hawkeye could not did not allow you to enter that trade because the longer term time frames had not aligned yet. But when this red bar came in, and you could see the volume, the second time frame, the third time frame, everything aligned at that point, then that was the highest probability, lowest risk entry point. And then once you saw that, volume, of course, leading the way, this was your safe entry point. And then you could see the resulting profit take from that was good. Okay. So I just wanted to show you that that was the confirmed entry. This was the confirmed profit point. And then the exit was either to allow it to come back to the Hawkeye stop, or just take your contracts out at the profit point, whichever one was set. Okay. Awesome. So there is a request right now to look at the DAX using the volume trader package. So let me pull up a layout, and I think I have a volume starter right here. I do. Okay, here's the volume starter package. It's a couple of things loaded on it. Some moving averages. So this is simply the starter plus some additional things added onto it. It's a daily chart. However, I'm going to pull up the DAX. Let me see. So this would be futures market. The DAX. Here it is. No, that's not it. Oh, you said it was the DE. So it's not really a. Oh, I see. It's a FX pair. Okay. So you want to go under a forex. Oh, FAGER30. Okay. No symbols. It doesn't like that. Okay, so let's try this. DE30. No symbols for that either. Okay, let's go to all. And I'll try this last time. There it is. Is that the one? All right. Good. All right, so looking here, you can see this is a daily chart. All right, right now we're looking at the current edge of the market. We're seeing a nice rally attempt for Hawkeye, showing that the bottom might be in, specifically in this market. The fast and the slow moving averages haven't crossed yet, but you can see that we got a nice wide bar. The wide bar here is shown by the little X at the top and the bottom of the price bar. On TradingView, if you use the volume paint bar, let me turn off the volume pack 2. Let's see, no, it's volume pack 1. Let me turn off volume pack 1 just to show it. See how the bar itself is purple? So the wide bar is actually painting purple at these locations, but with the volume paint bar turned on, it colors the primary bar first. So if you still want to see it, then if you go into your indicator in volume pack 2 and edit, format that, then you can see the show markers indicator is clicked to on. So that will show the X markers on top of the wide bar, because the volume pack 2 shows the pivots and the wide bars. Now you can load them individually and you can format them individually, but this is a package deal, so it gives you all of the inputs and styles associated with the pivots and the wide bars in one package. Okay, so from that you can see that this is a nice rally point. This then identifies that the market is reversing, and we have a high probability that at least in the next 3 to 5 price bars, the market's going to be going back up again within those 3 bars. So from that, then we can go back into the higher time frames. So let's go back to this Microsoft chart and let's type in an intraday. What time frame are you looking at, Steve? 5:15:30. All right. We can link all these. I just hadn't yet. All right, so let me turn these other ones off then. So trend and stops. Let's turn that one off. Keep the volume pack on, but in this one, let's turn off the heat map. Let's turn off the roadkill. You don't care what those are doing. You're just looking specifically at what the volume is doing here, okay? So let's make sure that that's... I don't have that set up already, so... There. All right, so this is looking primarily at the volume starter package intraday on the DAX as well. So, okay, so of course you're going to need to add other indicators to identify the trend. We normally would have the trend, but the moving averages, the lines themselves, you can put in trend lines, channels or whatnot, but the analysis is still the same. To make those trade decisions, you're going to need something other than volume to help you to make those decisions, because volume is going to be changing and giving you intermittent values based on that. So when you see wide bar, we know the wide bar rule, so those are important to follow. Price is always sucked back into the body of that wide bar, which is exactly what you see here. All right. Then you can see an attempt to break through. Okay, this is where the test point is. An attempt, wide bar, price is sucked into the bottom of that wide bar. Then you see your first close. Okay, above that, that's when you can look at going long at that point. So this then becomes your trend. That becomes your break, and this gives you a nice point to enter and to move. So when you see that trend broken with confirming volume, then that gives you a very nice entry point. You could have tried to enter back in here, but unless you have something to confirm an entry, then after this point right here, this could have confirmed, but you still haven't broken your range yet. So this is a really risky region to try to enter. Second and third time frame confirmation didn't give you that until at this point anyway. So right here is the first time you got both volume on the second and third time frame to confirm entry point, looking at a 5, 15, and 30. Okay, so 5-minute, 15-minute, and 30-minute, giving you confirmation of that overall trade. Okay, so did that answer your question, Steve? Good. Yeah, so overall, you're looking long. You probably are best rewarded with specific setups for long, because you could see that the daily, where is that one? Right there, itself had been, we're looking long based upon the pivot and the directional trade here. Overall, you're still short because the fast and slow moving averages have already crossed to the short side, and you can see that the MACD also hasn't given you any real clear indications for long. It is currently short also. So longer term, you're looking for this reversal to correct itself. If you're going faster, then you'll be okay. If you're looking at the longer time frame, then just wait for this to continue its downward move, because we do have a structure in place. Once you saw the floor broken, then you can see we made a new low. Here's a lower high, and here is a lower low. So now we have a very well structured downward move that will reward you well if you trade in that direction, even within the shorter term. So These upward moves really are only corrective in nature. You're looking mostly for the downward moves to align with the daily direction. Okay. So anytime you want to blow up a specific chart, in this case, this one right here, you can always use the full screen mode to expand that to get a better view of that. Use your wheel on your mouse to expand or contract the chart. This gives you a really quick way to zoom in and out if you're trying to get details on the specific chart. All right. If you only want to look at one specific area, simply double click on that particular part and it will highlight and bring only the point that you double clicked on. Double click again will bring it back. See, so you can look specifically at things of interest if you wanted to. And then the global full screen mode is right here to bring the entire screen. So it's a great way to use all of the available real estate that you've got. And then just to get out of the global full screen, just hit escape. And that puts you right back into it. That's a really quick and dirty use of the tools. So all the Hawkeye tools are available within the TradingView environment, within the constraints of TradingView. So none of our tick tools or anything like that are available since their tick charts and things like that aren't here. Yeah, Chris, inside the users area, the membership site, there's a video that I go through that shows exactly how to use the volume on the charts, and what I just went through today shows that. So even if we went back here to the gold chart, if you turned off the volume trend, and if you turned on, and let me pull this up here. Where'd it go? That one right there. Yeah, this is the one that I want to see. See the cross? The cross is the tool. It's a moving average cross. It's a tool that's right here. It's available within TradingView. There are quite a few of these specific tools that are available that you can apply and add volume to. But when you see this signal, it's like having the Hawkeye trend giving you an identified entry point. Then those are usually places to enter. Now these are lagging, so you're going to see an entry point right about here, but you can see even at that point you still had plenty of room to take some profit in that trade. And this was also the first point where there was a break below the consolidation base or the floor support that we already had built up there. You always see that by clusters of pivots. Okay, so those are some tidbits to take note of. But you can also see there's a MACD cross right here, which is a bearish signal for entry. So when you see the divergence go negative, then now that is usually an entry signal to go short. The moving average cross is an entry to go short when the fast moves below the slow. In this case, you had a double fast that moved below the slow. So that's the one that you want to look for to confirm. If volume is confirming that entry, then it gives you a lot more confidence to take that trade. A lot more. Okay? So in this case, 1, 2, 3, 4, 5, 6 days prior to your entry signal, you've had plenty of time to say, is this setting up? 6 days also of increasing responsive volume coming in. Now you think, well, that's a long time. 6 days, that's a whole week's worth of, oh, that's right, it is. But that helps to get you in the proper mindset because you're saying, I'm not looking to go long. Volume is telling me I'm looking for a confirmed short signal. So when it does come, you're all over that bad boy because you're not hesitating. You also know that volume is a leading indicator and shows you that. So now we're starting to see, based on that, we're starting to see that that is giving us a potential low point. This potential low point then needs to be validated. If you're trading it intraday, then yeah, you're trading short once you see this Here you're trading long once you see this on intraday, but in the overall structure, you're looking for this as a potential stall point. This is telling you that the downward trend has a high probability for reversing and stalling. Okay, we probably will see the price either trade back up or trade sideways right in this region. And there's good reason for it to do that. Why? If you look back, you can see there was quite a bit of support right in this area here. So no wonder when you see price coming down to that area, it starts to automatically become attractive to buyers. And the sellers attempting to go into that region were very, very quickly brought to terms by the buyers that were there. But now you're starting to see some ultra low volume coming in as it came back up there. So where did the buyers go? All right, that's another thing that we're looking at here. So right now we're looking for this to stall. If we don't break through these down pressure moving averages, then there's a very good chance that we could continue the existing trend that's there. Simple analysis, but using it purely from a volume perspective is going to give you a really high probability entry point and an exit point as well. So when you see this, and if you're short, these are really good exit points. Okay, so not only does it help you to make those decisions, it helps you ahead of time to see what's going on. So when you're trading back down in the faster time frames, then not only does it keep you safe, but it gives you really good confirmed entry and exit points. This daily, 10 and 20. These are just simple moving averages. The values really aren't that important, but if you look at the format of the cross itself, then you can see it's not set. I think it just comes in default, and I had put the 10 and 20 on there so that I could see uh, what they were, and so that's what they are. These are set to a 10 and a 20. And the MACD is a standard out of the box 12, 26, 9, and you're looking at the close. And so it's got the crosses and the histograms to show you when it goes bullish or bearish. All right, Gary wants to look at the S&P and the crude oil futures. Okay, be glad to. Do you want to look at it from a volume-only perspective? Do you want to look at it from looking at the trend and how Hawkeye would handle those specific ones? Okay, crude oil, NYMEX, that's the one. And this is basically the continuous contract, so we'll just use that one right there. All right, this is a 5-minute setup. All right, where I'm looking at a 5-minute, and I've got a 15-minute longer time frame looking at these sets. So looking at the setups, you can see how volume is showing that at the open of this session, the crude oil market opens at 9 o'clock in the morning. All right, so the open of this session was showing that the trend coming up into the open was long, but then you got a volume extension trying to get the retail traders into a false breakout, but Hawkeye's not letting you do that. Okay, we're seeing a nice build coming up into that, and then boom, red volume, and then big pull down right back into the start of that big. So you could see what the market makers were trying to do in pushing the market up to a region where they think is valuable. They're taking this as a big sell-off and a push into the market. The first retest back to support, okay, of the break level, which is very close to the open of the market. Okay, the market opened right here. Price rallied up, came back down, retested, boom, boom, and then back down, okay? Hawkeye didn't give you valid entry points until right here and right here. Okay, so here and here were both valid entry points to take that to the short side. You know you had a good short setup because volume was already showing you the setup was there. Okay, so crude oil's taking that. What are we looking at? All right, so if we were to look to this on the short side, getting the first or the second one would be right there. All right, so we're right now we're looking at that's about halfway. Okay, so we're looking at a almost 2.4 risk reward based upon the current price. Got about 50 cents is that target. So 50 cents is right. 10 times 5 is 50. 50 cents is good trade. It's $100 per 10 cents or $500, $1,000 per point. This is good trade. You're risking 200 to make 500. So about 2.45 to 1. The green, white, red dots in the middle of the price. Okay, these green, white, and red dot is the Hawkeye trend. The Hawkeye trend indicator, trend and stops. These are the stops associated with the trend. They're located at specific distances from price based upon whether the price is in consolidation or if it's trending. If it's trending, it's an automatic trailing stop to stay a certain distance away. And then when it starts consolidating, it fixes itself until it expands back again. See, so you can see it holds you in until the trend itself is strong enough to change. Once it does, then you see the stops go red, and then they start trailing back down and expanding back out as well. Okay, so the trend and stops are part of the standard package or the professional package. Professional package, or in TradingView, it would be the total package. It's the same as the professional package, but all the tools in a professional package are not available on TradingView, so we call it total, like in MetaTrader 4. Has all the same tools like MetaTrader 4 has. Absolutely. Yeah, and if you're not there yet, that's okay because we have monthly subscription options available as well if you're not quite ready to purchase. You can always do a low-cost month-to-month subscription and still have access to the tools while you're learning and applying them. So, yeah, it absolutely did. Now we're starting to see, and that's one other thing. You can see the volumes coming in here and starting to show that this is a point of consolidation and reversal. So you can see buyers are stepping in to buy into this. That doesn't necessarily mean it's going to close green. That's the one thing within TradingView here is that it shows you what the current tick by tick color is. It can be deceiving because this bar, while it is showing a large amount of buyers accumulating and building onto this bar, this is a really good pivot point, and if it closes this way, potential is high for it to be green, but it does not guarantee that by the time this bar closes, it will still be green or that buyers will still be. Now it closed green, so there, we got a nice high probability reversal signal on that, showing a downtrend. We have buying volume with the price extension coming in. So this is an initial, but we can't say it is certain because we have to wait for this bar to close now. Okay? This bar right here that's currently building needs to close, and we need to see a high greater than this high, and we need to see that this bar, the range of this bar is less than the range of this bar. So this has to be a true isolated low. A pivot will paint here, and that confirms that this is a reversal signal. But right now, it's not trading in that way. So we do have a nice confirmed signal here where we're looking at, nice 50-cent move. Nice 50-cent move, like I said, it's a really great move on crude oil. The volume on this is greater than the prior volume, so this looks like a big exhaustion bar of the push. Okay, so they pushed it up, they pushed it down, and got exhausted. Now it's a big profit take. So watch for the consolidation to come in. I don't have the pivots or the wide bar turned on this one, so let me see here. No, I don't. Oh, I've got it right here. Volume pack 2. Let me turn it on. There we go. So now you can see the wide bars and the pivots coming in. Okay, first wide bar, price sucked back in, pivot, and we're off to the races. I mean, it's almost like a really perfect setup. So, and it's really easy to see. If you're only just using volume, that's one thing. If you're using the trend, then that's a whole different story, because the trend looks at the average true range of each of the price bars. It looks at the standard deviation of price and the probabilities of the volume and price together. So based on that, it will change the color to a red if it's a predominantly downtrend, or green if it's predominantly an uptrend. It goes white when it is in neutral or congested trend. Okay. Okay, Joe, hang around. After the end of this session, I'll be more than glad to show you the TradeStation setup on that. But this class is dedicated specifically to TradingView, and I'll be more than glad to show you that once I complete today's class. Okay, John. Inventory comes out in about half an hour. That's right. Yeah, 10:30 today. You got crude oil. Always comes out unless it's a holiday week and it comes out on Thursdays. But definitely be watching that. If you're going to be, it's probably not going to go anywhere from this point until we see that news set up. So absolutely. I've got the exact same setup in NinjaTrader as well, so I'll be more than glad to show that once today's class is completed. Hang around. At the end of the class, I'll be more than glad to pull those up and show you. You really won't see that much of a difference. This is crude oil. Yeah, simple 5-minute chart. I prefer to trade crude oil on a 3, 6, and 12-minute setup. So same that you see over here on gold. See this gold setup? Same thing happened here. I think that I've got a 3 or 4 chart set up here. Here it is. That one and that one there. And so we can pull up crude oil on these as well if we're looking at intraday. But I like 3, 6, 12 minutes. And let me see if I've got a 3, 6, 12. I don't think I've got that one open here. So let me open that one up. I think I've got a chart layout from that one here. There it is. Oh, that's a 6 chart. All right, let's open that up. That looks like it's got gold loaded in it. Let's see what we've got there. This one has 6 charts set up where it's using the Fat Boy and Kiss, and this particular one looks like we're looking at gold. But let me change that to crude oil. Looks like I have all these linked, so that's nice. And you can see that the Fat Boy is set up so that I'm looking at specifically, look at this, the S&P, the NASDAQ, gold, YM, Russell, and let me see here. Let me pull that indicator up then. See exactly which ones I've got. There they are. Gold, YM, and Russell And finally, crude oil. The crude oil is the white one. So looking at crude oil, this is a 3-minute setup where I'm looking at 3-minute volume and heat map. I'm also looking at the 6-minute roadkill, 6-minute heat map, and the 12-minute. Here's my 6-minute setup, and then here is my 12-minute setup with a 60-minute setup. Now we don't have Hawkeye zones for TradingView yet, so what we're looking at here is a volume profile setup, looking at the overall profile of volume on those 60 minutes. So looking at the overall trend of a 60-minute, we're already looking down on crude oil. We've got a really nice confirmed reversal signal right here in the overnight. See that right here. So this was actually yesterday's open coming into that. So confirmed downtrend, a nice pushback up again right here, showing a confirmed downtrend on the 60-minute, on the 12-minute, on the 6-minute, even on the 3-minute. So that 3-minute gave a really nice entry point here. So here is an initial point, but it wasn't confirmed on it as a double dot. The first double dot we got right was right here. Okay. That's the highest probability lowest risk. And a 3-minute chart gave me a much nicer and cleaner entry than did the 5-minute. So that's why I prefer to use 3-minute charts. So this setup is really nice to be able to use that. This was an initial entry right here, but you can see the entry point wasn't confirmed by the third time frame, and here it was. And I actually got a better entry on this, and it looks like it was a much safer and cleaner entry. Okay, I still got the reversal signal, the high probability volume coming up into that. So this just shows that this is where the majority of people are going to be taking profits. So you should be taking profits here as well, and wait for the news to come out, which will be out in about 15 minutes. Yeah, if you look at the Fat Boy, it shows you the degree of correlation. So the S&P, Dow, NASDAQ are all highly correlated right now, but crude oil really is not. Crude oil is very not right here. They tend to be trending down, but they're not correlated. And here you can see gold is very decorrelated from the rest of the markets. So while you can see there's a high degree of very, very weak relative to the other markets, they are trending now. They are trending down and up at the same rate. However, there's a huge difference in the relative strength of crude oil versus the other markets. So that's the beauty of the Fat Boys. It gives you that type of distribution. Overall, the markets are opening up very weak and looking at that weakness to continue into this session here. All right, John, did I answer your question about the trend itself? I think so. All right. Or Chris, yeah, got that information. Yeah. Good. All right. Yeah. For those interested, if you do go over to Hawkeye's website, if we haven't already told you, then we have two different options. You can purchase the software or you can subscribe. The subscription options give you the ability to take the volume starter package, $17 a month, the standard package, which includes the trend and stops indicator. Okay, it includes the heat map. It includes the full volume package as well. It also includes the levels and paint bar and the grab tools. It also includes a vertical and countdown and so forth. But these are part of the standard. It's the minimum package that you need to follow our three-step entry-exit method is the standard package. The professional package is all the tools that are available. Now, you can see that there are some setup fees required, but on TradingView, there are no setup fees because all the indicators are already fully loaded within the TradingView platform. Okay, so there are no fees required for that. So if you were to purchase the TradingView package for standard, then there's no down payment, and the month to month is simply the value that you see here. So 57 a month for the standard or 97 a month. So I'll give you a full month for $57. You could see based on just today alone that the crude oil gave 500 bucks, gold gave over $250 per contract just following basic rules. So the standard package would have more than paid for itself. If you add the professional package, which includes the Roadkill, the Fat Boy, the Kiss, and all the other support tools, that just is gravy for an additional for additional $50, or no, it's 40, yeah, for just $40 more, then you've got the capability of looking at the overall breadth of the market. Pairs traders love the Fat Boy because it shows the decorrelation aspect and the ability to take these divergence trends and to capitalize on those. Gary wants to know, do I use the same setup for intraday stocks as well? You can use those absolutely. I think I had a setup here that's looking at that's intraday. So here's there it is. Here is the 15, 30, 60. So I can do, this is looking at the DAX, but you can look at any of the instruments as well. It doesn't have to be the DAX. It can be Microsoft. It can be any of the other tools that you're looking for. So regardless of the instrument that you're using, Hawkeye can be used to profit from these different markets. Now, the equity markets are going to be different from the futures markets because a lot of the equity markets have a lot of volatility first thing in the morning. So usually with the first hour and a half is the prime time to trade. So looking for these trade setups are quite unique and vary from instrument to instrument. But yes, to answer your question, I do use the exact same setup, the exact same analysis, the exact same signal rules to trade on the faster time frames as I do on the slower time frames. Okay, very good. Can I be specific on how to enter a trade on the S&P? Okay, Mark, I'll be glad to do that. So let me pull up the ES here, S&P 1. Okay, so this is the S&P. This morning we're looking at a 3-6-12 setup. You can see on the 60-minute chart that we are very much in a congested trend. All right, price definitely came down. We are in a downtrend, but notice the trend dots are all white, showing you that this is a very congested or neutral trend, that it's not continuing to go down. But we are starting to see a lot of volume coming in that is pushing this up. Okay, so for the past couple of days, we've seen a lot of volume happening. Right now, we are highly correlated to the downside, but we're starting to see right here at fair value that we're starting to see some curl. The Dow is the weakest. The S&P and the NASDAQ look like they're pretty highly correlated here. So let me expand that out just a little bit and see what we got here. Yeah, see here the NASDAQ and the Dow are pretty close together. The S&P is weak. It's stronger than the other two, but they are relatively weak. The Russell, it's the strong one. So you're looking at mid caps to be leading the way today. They're looking like they're the ones with more strength than the others on the market here. So you can see that set up there. I've got these currently set to both 3 minutes. Okay. So you can do the exact same thing. So if you're looking for precise entries and exits right now, there aren't any. Hawkeye is not allowing us to take an entry onto the S&P because there's no confirmed signal. Right. See right here, we got a signal here, but volume is white. We got no confirmed signal for the alignment of the second time frame. So right now, we're still just sitting on our thumbs waiting for a signal. We might get one right here because it looks like we're breaking out of our consolidation range. We're getting a close high. This might be, if we can see that, we got a signal here, but not the second time frame. We're just now starting to see volume hit. So once this bar closes, this might be the very first time we would have any type of an entry for a trade to get enter or long on the S&P this morning. Right now it's in line in the same direction as the hourly. You can see it's already in line with the 3, 6, and the 6 and 12 minute charts. So let's see if that does give us a confirmed entry here. Yeah, you can do the same thing, expand the chart and just look at it specifically, then you can get a little bit clearer picture of that. The roadkill indicator is the one that shows you when the longer or higher time frame charts set up. So this is telling you that there's a volume roadkill agreement here, but not on the longer time. So you notice the longer time frame is still white. That volume needs to be green in order for us to confirm this as entry. It's still showing congestion. So you can see it's trying, but we cannot take that tickle as a signal until this bar closes. Once this bar closes, we need to see that bar close greater than the high of this bar. I'm going to go ahead and pull that line in right now just to show you that. Okay, so that's the high point. We need to see a close above that line. That close has to be green. We need to see green volume. We need to see green heat map. We need to see green volume. It's got to be aligned, and so we need to see signals for that. It's a bar of strength. It's got to be greater than the open, and it's got to be greater than the prior high for us to confirm that. If that's the case, then we're going to be looking at putting a stop either here, if you're looking at holding it, or right about here, if you're looking at trending it. So this would be the risk in the trade. If that's the risk, then you need to have an appropriate reward target set up. Okay? So if you're looking at a halfway, we'll put it right about there then. Looks like about 10. Okay, so you're looking at a target of about 10 then. When you say 27.22, what is that? What do you mean by that? Okay, the bar closed. The bar did not break the high. The bar did not transition to green volume. No trade. We're still waiting. The bar closed back under that. We need to wait to see that this is confirmed. We do have good volume on the shorter time, but it's not enough to pull the longer time volume in. So we can't take this as a trade yet. It's still premature. Okay. Top of white bar. Oh, at the price 27. This bar here. Yeah. Okay. Well, I just drew that bar. I just drew the bar in myself. This bar right here it's just an array. I just drew it in and placed it there to show where the top of that bar is. All right, now we're going right back in. The price is starting to close above that bar. We got to wait for that bar to close though to confirm it, because this would have been premature. It could have worked out, but you're adding risk to the trade if you don't wait for the longer time frame volume confirmation. This actually isn't white. This is a light blue, but you can change the color of this to be any color that you like. And it's just the default white bar that comes with the trading view. So there's nothing there that's any special. John asked, when you purchase the package, are future platform changes included? Well, the software itself, if you purchase the software, then all the updates or any of the software changes that we do are included for a period of 1 year. There's a $35 maintenance fee per year if you want to get any other updates or have access to the members area within that 1 year period. And it's included, the first year is included in the purchase. You're welcome. Did I say 35? Or was it 37? I forget. Something like that. Something like that. What was the other question here? Ron, it said TradingView comes with all the data feeds for futures for. Yep, that's right, they do. But you have to subscribe to them. Most of the data isn't free, so you have to subscribe to the data. Most of the data, some of the data is free. A lot of the data is, but you still have to pay for it. But it does give you access to all the data feeds. See, Gary, you want to see, can you show us basic package, what it looks like on a chart, and is it good for day trading? Can you define the basic package? You mean like the standard, the Hawkeye standard package, or the starter package? I'll wait for your answer there. All right, let's go back to gold. Gold is still trending down relative to that. We're coming up real close to crude oil. So let's go back to our crude oil charts just to see what crude oil is doing. As we said, price came back down into this. It rallied back up 3 to 5 price bars, then it comes right back down. It's waiting for 10:30, which is when the news comes out. Here you're probably going to see price do this. We're going to get a nice wide bar. Then we're going to trade the resulting trend. Hawkeye does not usually give you any type of a signal during a wide bar. And we know from experience that when you see these wide bars, price has a high probability of sucking back into the middle of that wide bar. Okay, here's a big wide bar, as price sucks right back up into it. It's just the nature of the beast. Anytime you see these purple bars, you'll see price starting to trade inside those bars. Trade the resulting trend from the wide bar. Okay, and that's the idea, and that's what you would want to see from that. Okay, here we go. News just came out. We're seeing a big spike up. Okay, that's already a wide bar. You can see it's already painted. A lot of buying, a lot of selling, but it's got to come through and it's got to paint through first, and it's got to close. So we've got to wait for it to close. Once it does, then we're going to be looking at trading that the news result. This is a 5-minute. I usually like to trade based on 3. So let me change that to a 3. And then make sure that my roadkill here is set to, I'll set it to a 5, a 3 and a 5, I guess. Yeah. So this is definitely a wide bar. High probability price will suck back into the body of that wide bar. We're waiting 3 to 5 price bars after this bar closes in order to trade that. But volume was sitting here telling you ahead of time that they were pushing this down in order to see what they expected the results to be. So there was a very good chance that this was going to trade to the upside, but prior to that, you could see a lot of downward pressure. But this green volume bar was the largest magnitude volume bar coming into that. So it showed where the control was. Okay, so looking at that volume bar, and here's another one right here. These are both showing and defining that this market from this point looks like buyers are transitioning into control. With the volume starter package only, right here, then if we were to go back to the crude oil mark here, this is daily crude oil. You can see daily traders, they don't care about these news results. That doesn't affect their trade. But if you were to go back down into our intraday time, then absolutely you can see the impact of what these news events do on the packages. So using standard volume, you're still going to see the same type of information. You're still going to see these values plotted on your screen, and it's still going to be the significant part or the key to your decision making on whether you want to trade this long or trade it short. Volume is the key. So your starter package is going to be significant to help you to make these trade decisions. Now, when to get in, when to get out, then is going to be relative to other tools like a moving average, a trend line, a MACD, stochastic, Ichimoku, whatever that you might be using right now. Any of those lagging indicators are going to help you to make a trade decision. But if you have volume supporting the direction of the trade and helping you to trade, and if you're trading smart, then you're going to do well. You're going to learn these rules. But we have methodologies and we have a system of trading that helps us to trade smart, to help us to make definitive decisions on entries and exits. And we follow those trade plans with great success. As many of the people who are on Top Step trading in live money accounts can attest that Hawkeye is an extremely good and useful tool to help you develop a system that works and is consistent over time. So this is the starter package, the basic package, Gary. The basic package shows you the foundations of what volume and price relationship are, but it's not going to tell you where to enter definitively. So you're going to need something else a little bit more to help you. And that's why I was saying the moving averages, the MACDs, the Bollingers, the stochastics. If you're looking at these types of overbought, oversold, relative strength indicators, DMIs, you name it, they're going to give you basic entry or exit signals. We give you a tool that helps you to take those tools and use it with confidence. That when those signals, as late as they do come, when they do come, if you see that volume is behind it, either to the short side or to the long side, then you'll be able to take those trade decisions with a lot more confidence. Mark, on the huge green bar, it plots as a violet dot. Why doesn't it paint on my chart? And why is the huge green bar with me violet? Okay, this one right here, if you don't have the volume paint bar turned on, then it probably won't paint. So what I've got on here is the volume pack 2. I'll turn the volume pack 2 off, okay? And I'll turn volume pack 1 off. So what I've got here is just simple. This is the default colorations. If the close is less than the open, it will paint it this red color. If the close is greater than the open, it will paint it the green. So this is just green and red, so you're going to get just green and red. But if you turn Hawkeye volume on, I have volume paint bar applied to the chart. Okay, so if I look at my indicator list, then you can see these are the invite-only scripts that you should have access to if you've purchased Hawkeye. They're just right on the application, so you'll come up and apply them simply by clicking on them from the chart here on the right here. Okay, but you can see that you've got the Hawkeye Volume Pack 2 on and off. This tool, then this will turn the paint bar on. So let me turn this off. You can see it's colored purple. If you have paint bar turned on, then you won't see the purple bar. That's why we have the crosses at the top and the bottom to still identify that as a wide bar. Yeah, so the pack is just a useful tool to load up multiple indicators. But if you were to load the indicator and see those, then you can see you have the Hawkeye volume by itself. You have Hawkeye pivots by themselves. You have the Hawkeye wide bar all by itself. They are included in the volume pack 1. It includes the volume paint bar and the volume radar. Volume pack 2 includes the wide bar and the pivot. Those are all together. So if you put 1 and 2 on, that's 2 indicators as opposed to 5. So if you have the free version of TradingView, then you can still load all 5 indicators at the same time and still only be charged for 2, since you can only load 3 at the same time. Make sense? Good. Gary, so do we get these tools in the standard and then can upgrade later on to the pro? Absolutely. So right now, this is the starter package. So this is the introductory point. The let me see if I can find that. Yeah, the standard package then gives you, yeah, all the tools that you'd see here. You get the Hawkeye trend and stops. You get the heat map. You get all the volume tools, the volume radar, volume paint bar. You get all the pivots and the wave bar. So you get all the tools from starter plus the standard packages. Plus you get the ads in the wide bar. So all the tools that we had showed before, you get all those. Plus you get the trend stops. You get the levels, ATR and GRABA, and the heat map, and any of the bonus indicators that are included. Okay. And then at any point, you can always upgrade to the professional package to add the rest of the tools. And the only thing you pay is the difference in price. So if you paid $100 to set up here, then you only pay $150 to upgrade to the professional package. So you just get you get credit for whatever you previously bought on a subscription. That's right. All right, that about does it for me. I'm going to go ahead and stop the recording at this point.